Hi guys, today I would like to talk to you about the sale of equipment, and I picked exercise 10 as a basic exercise to demonstrate this principle. Okay, careful reading is absolutely required. A company owns equipment that costs $65,000. Underline it or put it in a circle or whatever you want to do with it. You purchased it on January 1st, 2014. It has been depreciated using the straight line, underline that. Estimated salvage value is $5,000 and estimated useful life is 5 years as well. You got to prepare the journal entry to record this sale, and we'll have 4 independent situations. For the first one, we sold equipment for $31,000 on January 1st, 2017. Okay, my very first recommendation, number 1, so you're going to write it font 46. You must check the date. Must check dates. Okay, what do I mean by that? You need to double check if accumulated depreciation has been updated for the year or not, for the very last year as we used the equipment. So we bought it January 1st and we're selling it January 1st again. So the very last time we did the journal entry for the depreciation will be December 31st, 2016. How do I know? Journal entry for the depreciation expense is an adjusting journal entry. It's normally prepared right before we prepare financial statements, which happens to be most likely annually. So, timeline will be very helpful. I'm just going to draw a really fast one without maybe even putting the years all the way, 1/1/14. Then a whole year, it's going to be 1/1/15, 1/1/16, and then 1/1/17 sold. So we have full 3 years worth of depreciation that we need to record. So let's calculate depreciation. For straight line, if you remember, it is cost minus salvage value divided by useful life, which is 5 years. We came up with $12,000 annual depreciation. So at the end of every year, 14, 15, and 16, we would have already recorded the depreciation. So we have $36,000 at the end of year 16 as a balance in accumulated depreciation. And it is up to date. We sold equipment the very next day. So how do we construct the sale journal entry? Couple of suggestions for you. If you look on the balance sheet right before you get rid of your equipment, you have 2 accounts that actually show the book value of equipment. You must get rid of both. First one is credit your equipment for cost. So I'm going to write it down, cost. You recorded it at cost, now it's going to be taken off at cost as well, $65,000. Next one, you're going to come up and debit accumulated depreciation. Remember, it's a contra asset, so currently it has a credit balance of $36,000. You're going to go ahead and debit that account for $36,000. Now, if you look at these two, when compared the two, you will have a book value given to you then, 65 minus 36, $29,000. Okay. Sometimes on the exam, the students make an error, and they simply credit equipment for book value, 29. You don't have 29 flat out on your books. You have 2 accounts that add up to 29, and you need to get rid of both. Next step, since it's a sale and not a simple disposal, please record your cash proceeds received. You got $31,000, cash debited, all good. And then the very last one, you have a couple of choices. The easiest one will be compare your debits and credits. So as of now, you have, 66,000 on the debit side, and you only have, not 66, 67,000 on your debit side, and 65,000 on your credit side. Since you know that debits must equal credits, you're $2,000 off on the credit side. You might remember or recall that we have gain or loss on disposal and it's one account that behaves in such a way that gains, just like revenue, will be on the credit side, and losses, just like expenses, will be on the debit side. So if we ended up with a gain, it must be my, if we ended up with a credit, it must be my gain. How else would you know? Just to double check. Remember I mentioned that the book value of this equipment was $29,000. You received $31,000 when you sold it. So you are better off. Your cash received was higher than what the value of the equipment on your books was by $2,000. It must be a gain situation.